Hey, what's up, guys? Brad here. So, today I want to talk about magic formula investing and how to maximize your returns using this technique. So, if you don't know, magic formula detailed in the little book that still beats the market by Joel Greenblatt. I'm going to assume that you're familiar with the magic formula. If you're not, check out that book. I've also made other videos about the magic formula, so check those out. But in this video, I want to talk about a few additional criteria that I would use if I were using the magic formula investing approach. Okay, so here's the magic formula screener. So here I use a market cap of 250 million. So this is only going to return companies where the stock price times the number of shares outstanding is equal to or greater than 250 million. Okay. And I've got it to return 30 companies. So essentially, how the magic formula works is every quarter you're going to be buying, a handful of companies until, after 9 months, you'll have up 20 to 30 companies that you're going to be invested in. Okay. So let's use, for this example, we'll say 6 stocks we're going to be buying every 3 months. So we'll buy today, we'll buy 3 months from now, 6 months from now, and 9 months from now. So we'll have 24 companies in the portfolio. And we're going to be tracking these on a spreadsheet, okay? So after a year, you're going to sell the companies that are no longer on this screener. And if they're still on the screener, you can continue to hold them. But, there's a lot of investors who use this screener to come up with stock ideas, okay? So, I think we can do better than just picking at random from this list companies that we're going to invest in using the magic formula investing approach. And I want to share a couple of those criteria. So the first is I want a company to have a write-up through Value Investors Club. Now, Joel Greenblatt created the magic formula. He also created the Value Investors Club. It's basically a site where investors submit investment ideas. And, there's a team that kind of reads these ideas and selects the best ones to be shared through this website, the Value Investors Club. So if a company has a Value Investors Club write-up, I think it's much more likely that it's a good investment compared to companies that don't have a Value Investors Club write-up. So what I did is I took these 30 companies and found out which ones have a Value Investors Club write-up. So that's the first criteria. No write-up, I'm not interested in the company. Now the second criteria is it owned? Is it currently owned by a super investor? Okay. Now, investors who manage more than $100 million in the US are required to disclose their equity holdings every quarter, their stock holdings every quarter. And these are investors who, have done really well over, the last number of decades, managing money, getting a higher return than kind of the market averages, the S&P 500. So these are really good investors. And if you limit the stocks that you buy to stocks that are owned by these super investors, you have a huge advantage. It's the equivalent of bowling with bumpers for investing, okay? So when I took this list of 30 companies, and the reason I selected $250 million as the minimum market cap, once you get below 250 million, there aren't many super investors that are buying these things. They're just too small. They're not going to move the needle in the portfolio for these investors that are managing, hundreds of millions or billions of dollars. These companies are just too small, below 250 million market cap. So that's why I used that as the minimum market cap. So when I ran this list through both the Value Investors Club and Dataroma, It has both the Value Investors Club write-up and it's owned by a super investor. There's 8 that come out of this list of 30, okay? So now I've narrowed down to 8 companies. I really want 6, right? Because I'm only buying 6 stocks per quarter. So the final way to narrow this down, and there's not a super simple way to find this one, unfortunately, but in this book, 100 Baggers by Chris Meyer, he talks about how you might go about finding stocks that return 100 to 1. Okay, so you invest $100 in a company, you're going to have $10,000 by the time you sell out. One of the biggest factors to look for in identifying 100 baggers is companies that have owner operators. Okay, and what that means is the CEO, the management team, the way they're compensated is directly proportional to how well the stock does. Okay, so maybe they have a large stock position in the company, or part of their compensation is stock options. Whatever the case, they're highly incentivized for the stock to do well in order to get paid. Okay, so that's the owner operator situation. And Charlie Munger talks about this when your interests as an investor are aligned with the interests of management, when management essentially does well by the stock price going up, the same factor that determines whether you do well. There's a much better track record for situations like that where you have an owner operator. The operator of the business owns a lot of the stock. Okay, it's very important to understand how management is incentivized, and when management incentives are aligned with your incentives, good things tend to happen. So, in order to get from the 8 companies that are both have a Value Investors Club write-up and are owned by a super investor, I would look at how is management compensated, and you can find that information by looking at the recent annual report, and there's other filings through the SEC that can help you understand. That wasn't it. SEC.gov. That can help you understand how management is compensated. So that's how I would get from the 8 down to the 6, is I would look at how management is compensated. So for example, we can search Altria here. Altria Group is one of the companies that shows up in both VIC and Dataroma. And you can look at the recent 10K, which is right here. That's the annual report. So you can go into that, and you can look at the section that talks about management compensation. Okay. So that requires a bit of digging, but it's probably well worth that extra effort to do that. So that's it, guys. Not a super complicated video here. How to get the most. I think this is gonna be how you're gonna get the most out of the magic formula investing approach, is to use the screener. Take advantage of this screener where these results are the best combination of cheap companies and good companies. Okay, it's a great screening tool. But then put on top of that companies that have passed. Some of these great investors are seeing upside in these investment opportunities. They've analyzed the investment, and then you've got some of the best investors in the world have pulled the trigger on these companies, have put their clients' money and their own money into these investment ideas, And how you do that, you just search, say the stock ticker is MO for Altria, and you can see, two of these super investors own this company, David Einhorn and Thomas Russo. And you can see how much of it is their portfolio. So David Einhorn, Altria makes up 1.7% of the overall equity portfolio. And David Einhorn actually bought Altria for the first time in the first quarter of 2020. So that's another good sign that that this company may be a good investment. And then finally, digging into the company filings to figure out, all right, how is management compensated? Are they making just a fixed salary each year? Or do they actually have skin in the game in terms of stock ownership, equity ownership? So, I think this is a great way to kind of narrow that list from 30 down to, 6 if you're doing 6 per quarter with the magic formula investing approach. Anyway, that's all I wanted to share, guys. I think this is a great way to maximize your returns with the approach. Let me know in the comments if you're using the magic formula, and how you're picking the 5 to 8 stocks every quarter for your portfolio. How are you narrowing it down from the 30 or 50 that you get from the initial screen results? Are you picking at random? Or is there another way that you're narrowing that list to decide which companies to buy? Anyway, guys, thanks for watching, and I'll see you in the next video. Take care.